I mean, great timing having you on. We're wrapping up 2020. We're looking ahead to 2021. It's obviously been a painful year for the economy, for startups. What have the priorities been in your view for a lot of these seeded startups and, survival rates, what have you, and how does that sort of take us into 2021?
Morning, guys, and thank you for having me. As we were coming into March this year, I think there was a lot of doom and gloom about, how the world was ending and how COVID was really going to be the dominant thing in the business world this year. And while that has been the case, I think what we've observed is that there's been an obsolescence of old business models and a bunch of new ones coming in and taking their place. And most of the new ones are digital business models. So really the massive beneficiary of COVID this year has been the startups and the tech companies that have been trying to really accelerate growth. And this has particularly been true in our markets where digital adoption was always the big driver for growth. And I feel like this year we've accelerated that curve and just leapfrogged a year or two in a matter of months.
So what's hot now when you look at next year?
Well, I think financial services, we're at the Singapore FinTech Festival. Obviously, that's a big one for us. But really pretty much anything that displaces, some of these old businesses with new ways of working, whether, it's remote work. I'm on a Zoom call right now and I have been for most of the year, whether it's, new and innovative ways to distribute services like education, like healthcare, or whether it's the adoption of some of the stuff that was, in the pipeline to begin with, digital payments, insurance, lending. All these have taken on a much more tech-first approach, and we're seeing that, accelerate even more as we head into 2021.
I want to focus on the regulatory environment because, of course, sitting here in Beijing, that's been a big focus for us in the last few months. The impacts, of course, on Alibaba and other tech players, fintech players here in the mainland. To what extent are regulators in Southeast Asia taking a look at what's happening, playing out here in China, but not just China, the discussions underway in the US as well, also in the European Union, and looking to emulate some of those regulations? And what are the potential challenges then for that fintech space?
Yeah, regulation in our markets has always been interesting. And while I can't comment on what's going on in China or Europe, I think in Southeast Asia, regulators have by and large been, very progressive. You guys probably saw the new digital bank licenses being given out by Singapore, whether it's some of the new regulation coming out of the Gojek in Indonesia. I think what regulators in our markets have found is that the best way to drive growth and financial inclusion, which, the latter being a pretty big objective of all of these regulators, is really to promote digital ways of running businesses. And this idea of having tech drive financial inclusion is really at the heart of a lot of regulatory changes in financial services, at least in our part of the world. Most of the other markets are broadly very open. I think one of the things that we benefit from a lot in Southeast Asia is being a hub for talent, much like the US has been for several years. We are finding that places like Singapore are really where the next generation of tech entrepreneurs are moving to start their businesses.
What is the IPO pipeline looking like for you next year, Abheek?
Well, I think we have a couple of companies in the mix in Southeast Asia and another half a dozen odd in India. I think our markets are still relatively early. We've been investing in Southeast Asia for about 6 years and, very active in the early stages of the business. So our portfolio is just starting to get to scale, whether it's, companies like Gojek, like Tokopedia, companies like Carousel, and then a whole bunch of these new companies that are, much more traditional tech startups that are still in the Series A, Series B stage, but really seeing this acceleration that, we, are really sort of our best case playing out this year in many of those companies.
Since you brought up Gojek, I need to ask you then, I'm sure you've seen the news, I'm sure you are aware of what's going on, these talks, of course, with Grab here. Is that the ideal exit, getting together with Grab? Is it not public markets? What do you think is best for most stakeholders right now when you look at those two?
Well, look, I obviously can't comment on exactly what's going on over there, but I do think that what we are seeing is each of these companies is getting to such enormous scale and market dominance. And the second thing that we're seeing that's actually very interesting is that, Gojek started off as a transportation business, but really the breadth of services that they now touch, this idea of building a super app for Indonesia, having a massive financial services play, having a very large food delivery play. In most other markets, each of these companies is a $10 to $50 billion company. And all of these businesses are inside one company in Indonesia. So that's what has us excited. I think the future of this company is, I mean, look, the market pull has been incredibly strong. Whether they go at it alone or whether they go at it together, I think that remains to be seen. But super excited about some of the traction that they've seen this year. It's been very, very impressive.
Abheek, you talked about some of those delivery companies, one of Sequoia's portfolio companies. I know it's not specifically within your framework necessarily. Doordash, looking at a valuation potentially of around $38 billion US. Are you looking at similar style companies in your part of the world, in Southeast Asia?
Guys, I think that's an excellent question. What has set some of these companies apart, and we are seeing this in Southeast Asia as well, has been this relentless focus on unit economics. The new generation of companies that are coming out are really focused on how to make sure that profitability is at the heart of their business models, and that's what sets aside some of the really good companies, versus the ones that might have come in the first generation that may not have had as much of a focus on the bottom line and burnt way too much cash to get to scale. So we are seeing that in our portfolio across India and Southeast Asia, where unit economics start to work very early in the life of a company. In fact, just this year, 3 out of the 7 companies that we've invested in, even at the Series A stage, have been companies that have been profitable. And so for us, this relentless focus on economics, this focus on getting business models right very early on in the life of a company is really what sets apart some of these incredible long-term enduring businesses from ones that frankly don't succeed.